The big question now is, for the new year, will the economy and the markets continue to grow? Steve Liesman takes a look tonight.
2015 should be the year we find the missing link in America's 5-year-old economic recovery. We've had a surging stock market, runaway corporate profits, and in the second and third quarters of 2014, the best 6 months of growth in 11 years. But what's been painfully absent has been improving fortunes for average Americans, and many economists think that could change in 2015.
The wages are going up 2%. I think next year they go up more like 2.5%, heading up to 3% in 2016.
Add to that plunging gasoline prices and a 30% decline in natural gas costs, and consumers should have more money in their pockets this year, filling in that missing ingredient of the recovery. And there could be more firsts this year.
I think sometime around the middle of this year, the Federal Reserve will start raising rates. But even more important than that, I think the pace is going to be pretty gradual.
It would be the first rate hike since 2006, and forecasts call for gradual hikes by the central bank. One reason rates fell last year was weakness in foreign economies, especially Europe and Asia. So far, the U.S. recovery has weathered that weakness, but it remains the major threat for 2015. Another is that lower oil prices drag down the U.S. economy because the nation has become such a significant producer in the past several years. But most economists still see it as a net positive for the U.S. And it appears that U.S. exporters will be challenged by a stronger dollar, which makes their goods more expensive overseas. But the fundamentals do appear to line up for a modestly upbeat year of growth of around 3%, a year when average Americans should enjoy more of the fruits of the expansion than they have so far. For Nightly Business Report, I'm Steve Liesman.